Welcome to Solidarity Spotlight, the place where we share with you bleeding edge stories. I'm your host, Solidarity. Let's discover what's happening today in blockchain. The cryptocurrency landscape is exhibiting fascinating dynamics today, marked by regulatory milestones and technological advancements. Bitcoin's price movement shows resilience despite minor corrections, currently hovering near $117,400, after briefly touching $123,100 this week. This stability amid market volatility underscores institutional confidence, particularly as spot Bitcoin ETFs continue to record unprecedented inflows. Ethereum, however, is stealing the spotlight with a 5.8% surge, firmly holding above $3,100. This strength appears driven by anticipatory sentiment around regulatory clarity and growing institutional interest in its ecosystem. The outperformance of Ethereum against Bitcoin suggests a potential shift in market dynamics, where altcoins could see accelerated growth if this momentum persists. Regulatory developments are dominating the narrative, especially with Washington's Crypto Week in full swing. The Clarity Act, now under intense debate, represents a watershed moment for digital asset classification. Its provisions, splitting oversight between the SEC and CFTC while protecting self-custody rights, could eliminate years of jurisdictional ambiguity. Should this pass, expect a cascade effect: streamlined compliance for exchanges like Coinbase, accelerated institutional onboarding, and enhanced market liquidity. Simultaneously, the Genius Act faces political headwinds after a procedural stumble in the House. Its revival hinges on negotiations. But its potential to regulate stablecoins could reshape payment infrastructures globally. Market participants are closely monitoring these bills, as their outcomes may determine whether the U.S. cements its position as a crypto leader or cedes ground to more agile jurisdictions. Technological innovation is progressing at breakneck speed. Bitcoin developers have proposed a radical solution to quantum computing threats, a phased soft fork that would freeze vulnerable legacy addresses, including Satoshi Nakamoto's. This preemptive measure highlights the community's forward-thinking approach to existential risks. While implementation would require unprecedented consensus, its mere proposal signals maturing governance frameworks. Meanwhile, BNB Chain's 2025 to 2026 roadmap targets a staggering 20,000 TPS, leveraging Rust-based clients and superinstructions to optimize smart contracts. Such scalability could position it as a backbone for decentralized finance, particularly if integrated with real-world asset tokenization. Polygon 2 is capitalizing on upgrade anticipation. Its Heimdall V2 promises 5-second transaction finality, driving a 19% price surge. These infrastructure leaps collectively suggest a future where blockchain efficiency rivals traditional finance systems. Institutional adoption continues unabated. Bernstein analysts project a long and exhausting bull run, with Bitcoin potentially reaching $200,000 by early 2026. Their thesis hinges on structural shifts: Bitcoin as a hard money reserve, tokenization of traditional assets, and regulated entities like Circle and Coinbase becoming financial gatekeepers. GameStop's CEO amplified this narrative, revealing their $500 million Bitcoin allocation as an inflation hedge while teasing crypto payments for trading cards. This corporate embrace of digital assets, driven by firms like MicroStrategy and now GameStop, could normalize treasury diversification beyond gold or bonds, indirectly pressuring legacy financial instruments. Security remains a critical concern. Big One Exchange suffered a $27 million hot wallet breach, compromising assets from BTC to niche tokens. While user funds will be reimbursed using reserves and external capital, the incident underscores persistent vulnerabilities in centralized custodianship. Such events may accelerate demand for decentralized alternatives or insured custody solutions, reshaping how investors assess exchange reliability. The market's technical structure reveals intriguing patterns. Bitcoin's supply squeeze, with ETFs absorbing approximately 8,200 BTC daily versus 450 BTC mined, creates a bullish asymmetry. Ethereum's breakout against Bitcoin, now at multi-month highs, suggests capital rotation into altcoins. Should ETFs sustain this trajectory, Bitcoin's market dominance, currently 63.82%, could decline, fueling altcoin rallies. Projects like Bitcoin Hyper, a Solana VM-based Bitcoin Layer 2, exemplify infrastructure innovation attracting pre-sale interest, while dormant Bitcoin wallets, awakening after 14 years, moving $2.2 billion, hint at long-term holder confidence. In closing, today's ecosystem reflects a pivotal convergence. Regulatory clarity beckons, institutions deepen their foothold, and technology evolves to support mainstream utility. While regulatory outcomes remain uncertain, the directional momentum toward integration with traditional finance seems irreversible. That concludes today's Blockchain Spotlight. I would love to know your thoughts. Thanks for listening, and don't forget to follow me for more spotlights. See you next time.